Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. How high can silver go? How high will silver go? Time will only tell, but we can speculate, we can give our predictions and our forecasts looking at what's happening in the economy, the chart standpoint, and a couple other things we're going to talk about in this video. So, I have an article talking about how silver finally decides to join the gold party, and also how silver begins to accelerate higher faster than gold. Gold to silver ratio is closing back down, dropping a few points to 105, the lowest we've seen it in 2 months, and that's very good news because we know that when the silver and gold ratios start to equalize, that means that silver is passing or outperforming the yellow metal, which we all have been speculating, we all have been hoping for. We know that silver has much more potential than gold does, and now it's finally coming into play. So with that said, make sure to smash the like button. Let's see if this video can get 150 likes. Everyone go like the video right now. Thank you so much for tuning in. Let's jump into these articles. So with the gold price breaking out of its month-long symmetrical triangle this week, silver has decided to join the gold party. As mentioned in this column last week, silver equities had been telegraphing this move for the past month, and the metal finally received the message this week. Since the deflationary panic to cash ended in mid-March, the global silver miners ETF SIL has been rapidly closing in on its highest level in 3 years. Both the SIL and the junior silver miner stock SILJ have participated in the sector strength, while both have also outperformed silver, and the SIL has dramatically outperformed the metal. Moreover, most pure-play silver junior stocks are double digits this morning and have begun to catch up with the global gold miners, which have already broken out of huge basing patterns. Many of the riskier juniors have formed bullish inverse head and shoulder patterns on their respective charts, while having reached or exceeded the neckline. Throughout previous gold bull markets, along with this one, the higher risk silver and precious metal junior sectors have mostly traded in tandem while tagging or lagging the gold complex. Although this occurrence has frustrated resource speculators since the bear market in the junior space began in 2013, there have been more than a handful of junior success stories to keep them interested but not fully committed. However, the patience of long-term speculators in this volatile arena is beginning to pay off, and despite the huge moves off major lows, there is still plenty of time to get in the sector before the real fireworks begin. Once silver breaks out above long-term resistance at $20, I expect the fear of missing out, or FOMO, stage to begin, as we are in the early stages of what I believe would be a new minor bull cycle. Once this new floor has been created in silver, the junior sector will reward speculators who have accumulated long-term holding positions on weakness in quality companies before the metal has done so. Although the current move in the mining complex has become overextended, corrections will be short and sharp buying opportunities as the GDX moves toward its ultimate impulse move target of $50. So, they're talking about the ETF side of it, the digital side of it, but it's still essentially the same thing. The same thing's going to be happening with the physical side of it, and we're just going to be buying the same times, just the physical metal instead of the digital. So there is many benefits with the physical asset compared to the digital, which I always talk about. And that's because if you can't hold it, you don't own it. You want to be in complete control of your wealth, complete control of your future, then buy physical precious metals from places like APMEX, Provident Metals, JM Bullion, Modern CoinMart, etc. So now let's talk about this article. Silver begins to accelerate higher and faster than gold. Precious metals have been on our radar for many months. And if you've been paying attention, you'd probably already know our research suggests gold and silver are one of the best investments you can make right now. Recently, we shared this article suggesting gold would need to rally above our proprietary Fibonacci price amplitude near $1,745 before it would attempt a bigger price upside. Additionally, just a few days ago, we published this article suggesting silver would begin to rally even faster than gold. Today, both gold and silver are making bigger upside price moves, with silver up over 3%, with gold is up 1.3%. We believe this nearly 250% faster silver advance may be the start of what we had been predicting for many months, an incredible parabolic upside price advance in both gold and silver. Earlier research by our team suggested that a setup would happen in precious metals where silver began advancing much faster than gold, and this move would likely prompt a downside move in the gold to silver ratio targeting the 50 to 65 level. Right now it's at 103 or 105, so it would still need to drop nearly double what it is right now. That's going to put silver at an extremely bullish spot. Our earlier research suggests when this move/setup begins, we could begin to experience nearly 250% to 350% rally in gold, targeting $3,750, and a 550% to 650% rally in silver, targeting over $70 over a 12-month time span. This article today is alerting our readers that we believe this setup is happening right now, and the upside rally in precious metals should begin to really accelerate over the next 5+ months. Wow. Talk about bullish. A 550% to 650% rally in silver, putting it at $70 in a 12-month span of time. What do you think about that? Do you think this is just silver pumpers? Kitco, they obviously are bullish on precious metals, but they speak with informative decisions. They don't just say stuff, right? They don't just say stuff to say it. It's definitely interesting, and it's definitely bullish. So, the gold to silver ratio chart, including gold and silver price levels, clearly illustrates what happens when the gold to silver ratio starts to collapse. In 2009, the blue gold to silver ratio level began to collapse from 85 to 32, well over 50 points, 58%. The current gold to silver ratio high is near 120. Another 58% collapse from that level would suggest gold to silver ratio could fall to 50 or further, which would indicate both gold and silver could rally extensively throughout the next 12 and plus months. So they're looking at the charts and showing the data that's giving extremely potential or accurate potential positions in prices rising. All this is pointing towards higher gold and silver prices. The daily gold chart highlights our proprietary Fibonacci price amplitude arc system, as well as our Fibonacci price modeling system. Our researchers believe once gold rallies above the green arc, it should begin to skyrocket higher in a series of upside price advances over the next few months or longer. This 1.618 Fibonacci price amplitude arc is acting as a strong resistance level currently. Once gold breaks above this level, a big rally may take place in gold, which could drive a bigger rally in silver, right? Because silver is gold's little brother, silver follows suit. This weekly gold chart shows you what we expect to see happen over the next 30 to 60 days. First, once gold breaks the green arc level, a rally will take place, driving gold up near the $1,999 level. Then, gold prices should stall and rotated downward a bit, targeting the $1,900 level to $1,920 level. After that, gold will begin another upside price rally targeting $2,100 or higher. So there has to be a small correction, there has to be a small dip, right? That's healthy. Ultimately, our upside price target for gold is $3,750 many months into the future. Yet, we continue to believe this move in precious metals could be one of the biggest and fastest upside price moves in over 100 years. We believe once this move really gets started, it will be almost impossible to accurately predict where the top will set up in gold and silver. So, that's definitely true. Here's the concluding thoughts. If there's one thing you should understand about this setup and the potential for the future is that between 2008 and 2011, gold rallied over 300%, while silver rallied over 600%, just after the credit crisis event. Through this virus pandemic, this virus outbreak, global economic crisis is likely much bigger than the 2008-2009 credit crisis event, and that's why we believe this is an incredible opportunity for skilled technical investors. And that's true, right? 2008 to 2011 put silver at $50, and times are much more severe, much more extreme than back then, so expect the prices to be just as extreme, if not higher. And that's why you need to buy silver right now while it's still cheap. It still is extremely cheap relative to gold, meaning that silver is the better buy. It's that obvious. I'm curious what you thought about this video. If you enjoyed it, if you love precious metals, make sure to smash the like button. Make sure to also hit that like button If you're bullish on silver, I want to see 150 likes on this video. At least I know we can reach that goal. Thank you so much for tuning in. If you thought this video was educational, informational, or at least just entertaining, make sure to smash the like button. Make sure you subscribe because I post daily videos. I posted 2 other videos a day diving deep into silver's price and what's happening, why silver prices are rising, and where they could be headed. If you want to check out those videos, they are bangers. Go click the link. Check out the last 2 videos. I definitely think you don't want to miss those. Anyways, thanks so much for tuning in, especially if you stuck around this long into the video. I appreciate you so much. This was Silver Slayer. I'll see you guys soon. Peace.